All right, on to this now. Those with car and home loans will be put under even more pressure following the repo rate hike. The Reserve Bank announced the bigger than expected hike yesterday. The central bank increased the rate by 50 basis points to 7.75%. The prime lending rate now climbs to 11.25%. Let's get more reaction now from NWU Business School economist Professor Raymond Parsons. Thank you, Prof, for your time here on ENCA. What really could have motivated the Reserve Bank to opt for this jump, 50 basis points? A lot of people were predicting at least 25.
Good afternoon to you. Look, I think we've got to understand that the point of departure for the Reserve Bank and for monetary policy in the world of today and in the South Africa of today is one of great complexity and uncertainty. There are cross currents, and of course, you look at the data, you look at the global data, you look at the South African data, and you will see how complex it is to the fact that the Monetary Policy Committee was divided 3-2 in favor of the 50 basis points increase. That shows you how complex the data is and where there's room for some difference of emphasis. Now you ask, what are the reasons? Well, if we look at the majority view, and I think that view is shared by the whole committee and by most economists, that some increase in our interest rates was expected. The question is, why did they go to 50 basis points? The issue is that they were very much concerned about where we're going with inflation at the moment. The inflationary expectations play quite a big part. They looked at oil prices, they looked at electricity prices, they looked at food prices, and they came to the conclusion that they needed to give some kind of shock treatment to our economy in order to say, look, we are determined to now bring down inflation over time. So I think there's a recognition on everyone's part that we do need to see the Reserve Bank deal with inflation and inflationary expectations. But the majority view placed much more emphasis on what has actually been happening with the CPI and with core inflation. And so from that point of view, one can honestly say that there was a legitimate difference of opinion as to how you weight the upside risks to inflation, which were outlined by the statement on the one hand, and on the other hand, what are now the risks to growth, the downside risks to growth. And I think some of the difference of opinion flows from the different weighting that one might give to one's concerns about inflation on the one hand and growth on the other.
All right, but looking at this, it looks like we've now started to pay, more than what we used to pay pre-COVID times.
Well, yes, I mean, obviously, it's taking longer to bring down inflation for both global reasons and domestic reasons. And those who only wanted 25 basis points are still saying, look, we have to deal with inflation. I think the difference of opinion is the pace at which you do so, and that in the meantime, since the pandemic, other issues such as the electricity crisis, Eskom, Transnet, all the other issues that are pushing up the cost structure in South Africa have come to haunt us. And so what the Reserve Bank is saying that within its mandate, it wishes to take certain steps, certain of the traditional steps which are taken by central banks, not only in South Africa, but all around the world, in order to tame inflation. And the fact remains that this cumulative impact of interest rates is now bringing our rates of interest to quite a high level, and there are choices to be made. There are some decisions to be made as to how you weigh the continued inflation on the one hand with the risks to growth on the other hand.
Now, the MPC has also reduced its growth focus this year from 0.3% to 0.2%, which is another thing that seems depressing, because what challenges does this present for interest rates in future?
Well, I think the issue here for some of us is that since you started with the increase in the interest rate cycle about 18 months ago, and you're now expecting to see the cumulative impact on our economy. This is coinciding with the Eskom crisis, with the load shedding, and the economic damage that has been doing to our economy. So what are you looking at the moment in the growth scenario? we've got the Reserve Bank has now further reduced its growth forecast for this year from 0.3 to 0.2% for this year. That the IMF, that is the International Monetary Fund, has also reduced its forecast from 1.2% to 0.1%, and overnight Fitch, which is the credit agency, has also said it's seeing our growth rate this year at 0.2%. So I think the issue here for some people is that if you push up interest rates too rapidly or too strongly, you might get into an overkill situation.
Yes.
I think that is one of the dividing lines between those who went for the 50 basis points and say, let's give a shock to inflation, and those who are saying, let's go for 25 basis points. It's a more moderate increase because there are so many uncertainties that we now have to weigh up both globally and domestically.
I mean, if you look at it, if you actually got a bond to pay for a home that cost you 1 million, depending on what you got, what lending you got it from the banks in terms of percentage, it probably went up by about 3.5 thousand rand between September and now. But is there any way that the MPC can find a way to cushion us against this? It's such a rapid increase and the cost of living is becoming impossible for many.
Well, I think it's often said that inflation is a tax on the poor. One can also say that if interest rates are too high, they are a tax on employment. So that's the balance we have to look, and that is what the Reserve Bank has to look for. But the fact remains that there is a mandate that the Reserve Bank has to carry out. There's no difference of opinion about that. The issue is really the pace at which you react as a central bank. I think the important point here is to bear in mind that if the costs of doing business and the costs to consumers in South Africa are too high, which has been recognized by government and others for some time, there are various steps you need to take. For example, I've already mentioned the load shedding, and the Reserve Bank itself said that it's doing a calculation as to how much is the load shedding not taking off growth, but also adding to our expectations of inflation. We need to look at Transnet's transport costs. We need to look at productivity in an effort to bring down the costs of doing business in South Africa and the costs to the person in the street. We cannot put it all on the shoulders of the Reserve Bank, but I think it does require both action by the Reserve Bank and action by other players in the economy to ensure that over time we can bring inflation down back within the inflation target of the Reserve Bank, so we get the price stability we need and the growth to underpin it.
Yeah, well, it's killing us, Prof, and I'm sure you're also in the same bag. I mean, just last year in August, the prime lending rate was 9%. 6 months later, it's 11.25%. It's shocking. But thank you so much for your time here on ENCA. NWU Business School economist, Professor Raymond Parsons.